So just to follow up then, I don't know if anyone's going to pick this up over the weekend, but we were talking about cable, weren't we? And we were looking at a method in how to fade this rally. So um, you called it, you said, right, this looks like a time to sell. I said, maybe see, maybe not. Um, you don't want to just jump in it on a whim, and you want to have a criteria met in order to enter your trade. So in this respect, we talked about the break of structure, which happened over here, and we talked about wanting to see that, and rather than FOMO getting a hold of you and trying to jump in on, oh, it's broken structure, it's got to go down. No, this market will work out a schematic and build bearish structure before heading lower. Not always, but most of the time, right? So you're just better off to trade your setups and not trade your emotions. So in this respect, we wanted to see this come back up, and we thought, well, perhaps this could be resistance over here. So if we put our entry in around this area, and I actually calculated that it could move up a little bit higher up to here, perhaps. Anyway, so we got triggered, moved up into that prior support, and subsequently it has started to sell off. Now, that's not to say that this will sell off, but our thesis was built on the basis of the W formation, the neckline support, that length, plenty of liquidity for the market to move into towards that next area of support, 126.20, a little bit lower, potentially much lower. You can adjust it as you go. You can take off money. You can pull down your stop, trail it, let it run, however you want to manage that risk. But that is essentially how I would look to fade these rallies. Now, with respect to the trade and how to manage it, entirely up to you. This is a 15-minute chart. We've now got a W formation formed, right? So let's fade that out. Leave it there so you know what we're doing. But we've got this W, which is problematic. Okay, so that is support. Potential support anyway, right? So this could quite easily pop in and move on up and put this trade under heat. But we've got our stop loss, so trade your plan, not your emotions. Stop loss is up there, takes you out, takes you out. Now, whether you want to take some money off, just move it to break even. If you don't want to run risk if you don't want to be in drawdown, that's entirely up to the individual. But this is just a scenario that's playing out. On a break of this, however, you might be encouraged to add to the position. So that's another option. Alternatively, you could move the stop loss down. You might figure, well, we've seen the highs, and I don't want to risk losing a full whatever your risk is, but I don't want to take money off. I want to keep my stake on as high as possible, and I will let that run. But if it pops up higher, I'm out, and I'm out at a lesser loss than my original stop loss. There's another way to do it. I don't recommend that. Let the trades breathe, let it play out. More often than not, you'll see these breaks of structures, and you'll be pulled back up um, in markets that are sideways and choppy and slow. A trade like this, on the other hand, during a more liquid, volatile time, these trades can last 15 minutes, half an hour, and you're out. Um, they just tend to blow off. But in these environments, they're choppy, they move around, put you under heat, so you just trade your plan. Okay, so we'll leave it there. I'll run it until the end of the until rollover and see what happens. Just checking up on this cable. So 5 minute charts looking quite promising for the close, but we're sort of 10 pips away from the target. The structure here now is here. We've taken out that, so that's nice. We've got plenty of room to slide. So on that basis, we can move to break even. We've got plenty of structure. If this were to pop up higher, well, that would just be particularly unfair, really. So cover some commissions. So yeah, that's something for the open. Then we'll pop down. Really wide spreads, but we're well. Where are we? It stops down here now, isn't it? Oh, we'll have to see. That should be all right. But I hope that clears up the what do you call it, the plan of attack, as it were, right? So that was the idea, the concept, and that's something that I like to see on a regular basis. But again, as I said, I don't want to be involved in all of this stuff. Um, I want markets that are fast um, around the open of the equities hours, where you can see these pumps and collapses, and you're in and out of the market. Turn your screens off and come back for another session and rinse and repeat.